daily outlook for Monday, August 3rd. Alright, we'll be coming inside the marketplace into a new monthly open. So we're going to first start analyzing here the range of 3-month look back. If we go back 3 months, right, you can see that the market came from a classic bi-monthly profile in May. This was followed by a swing to Z profile here in June, closing off the second quarter. And since then, the third quarter has opened, and the first month of the quarter here was a sell profile, right? So the market comes from expansion, consolidation, expansion. Okay, so since here the previous month was an expansion, to the downside obviously, we can grade this range. This will help us identify all the premium levels that are located inside of the range. Right, so we have the high here, which is the quarterly open, right? So we can mark that out as the Q3 open. This is important. Why? Because this becomes a low-hanging fruit drawn liquidity. If your belief is that, right, if your belief about the yearly profile is that it is a classic buy, right, price so far has expanded, consolidated, expanded, right? Again, the question we're trying to answer here is this expansion retracement, or is this expansion the start of a reversal, right? That's the idea here. If you believe this is retracement, the low-hanging fruit drawn liquidity definitely is the quarterly open, right? Because you would anticipate an open, low, high, close quarterly profile that aligns with an open, low, high, close yearly profile. Okay, so at the highs, this is what is located, right? There's the open of the quarter, pretty important level. If you were to look at price at what's located in premium of the previous monthly range, right? So right at 75%, you can see that this is where the range here was tight, right? The range has started to get tight around here, and we were anticipating, right, a quick move out, right, either higher or lower, right? When the market gets very tight like that, it means it's accumulating liquidity for a distribution. Okay. Now, if we're to analyze what's inside of this range, obviously the range is very high resistance. Right? You see that there's many up close candles, many down close candles. This is a range where you'll find a lot of new day opening gaps and new week opening gaps stacked up on top of each other. But simply from a candle perspective, from a price perspective here, I do personally like this order block here, and the reason for that is because it is located inside 50%, right, of another order block, and this was also here the final accumulation before the distribution lower, okay, before the low resistance price action in here. So personally, I'll be marking out this order block as a premium array. If we're to look at what's at 50% of the range, right, this is where we have many PD rays stacked up on top of each other here. You have a rejection block, a bearish order block, a suspension block. Personally, given the case here, I'll be using, given the context, I mean, I'll be using the range here of the suspension block. And eventually in discount, right, on the daily is maybe not so clear. Look, you could put up quadrants here on the wick of Wednesday, which was FOMC day. There wouldn't be anything wrong with it, but personally, I think that these levels can be refined to lower time frames. Right? In fact, when we look at the 3-week look back, the 3-day look back, we'll see that the PD rays located inside of this range here are very obvious. Okay, so which is not the case on the daily. So for the moment, I'll be leaving. I won't be touching anything at these levels. If I wanted to put a level, I would use the suspension block here. Right? The market had traded below it, eventually has reclaimed it. So if the market were to come back inside of this range, I would be interested in seeing if it will provide as a phase of reaccumulation, or will the market simply use it, right, as distribution and inverse it once more. Okay, and then at the low of the previous monthly range, we have the monthly low, right? In which happens to be here a new day opening gap that's been unfilled, right? This was the day following the FOMC day. Okay, so we would have here at the highs of the previous month, the quarterly open. We would have here at 75% of the range a bearish order block. Now, since this bearish order block is near the range of the suspension block, I'll remove the low and the high of it, right? Simply keep 75, 50, 25% of it. I think that these are the level that should offer sensitivity in case the market were to trade in premium. At 50% of the range, this is where you find the range of the suspension block. We saw that there was many other PD rays, the order block, the rejection block. You got here what will be going inside of this new week, the previous weekly high. Okay, so a lot of pre rays in this range. Look, I do believe that if the market is able to inverse, right, this rejection block here, right, simply even a closure above 50% of it, in my opinion, should be enough to favor a delivery higher. Okay, that's in terms of a daily chart. If I were to see the market close above 50% of this wick, close above 50% of this wick, even though it still wouldn't close, right, all depending on the day itself. You get a closure above 50% of these wicks, but you don't get a closure yet above 50% of the suspension block. Look, it wouldn't be 100% guaranteed, but it would be a good sign that order flow is bullish. Okay, and given again the higher time frame context here of the yearly profile, very likely, okay, the low of the month here can be put in early in August, right? Because from a 3-month look back perspective, August will be opening in discount. All right, in fact, the low here of the 3-month look back is the previous weekly low. Okay, so when we look at the lower time frame PD rays, we'll see that what's left behind this range here will be very, very important for bullish order flow. Okay, and if ever the market were to reject in premium, right, or maybe even from the open of August, right, trades inside the rejection block and keeps trading lower from there. Now, in that case, we wouldn't have any PD rays left on the range of the 3-month look back. We need to look back at something such as a quarterly look back. So essentially, you know, the current yearly range that we have. And aligned with standard deviations, we had identified here a weekly inefficiency in the range, located in discount. So I do believe that if the market will keep trading lower, the drawn liquidity should be the range in between 26,800 and, well, 26,800 and 26,250. Eventually then obviously past that, we need to look at price action, because there could always be, right, this happening from those levels if that's what were to happen, just like there can be this. Okay, so we'll get back to the daily chart later once we do the recap. We can now look at a 3-week look back. We can analyze the phase of price delivery inside of this range. So 3 weeks ago we had the market deliver as a reversal profile, right? So expansion lower. Eventually we've had the same thing happening here. Now in this case it happens to be a Tuesday high of week, right? We remember that the market on Wednesday had created a divergence with the S&P 500 at Tuesday's high. So, you know, expansion, retracement, expansion, and then we come here to the previous week, right, which had Monday here trades higher, continues the overall trend. Eventually here on FOMC day, right, the market consolidates into FOMC, expands lower, and then at the opening of Thursday, the market reverses, right? And in fact, you can see that it leaves here a large discount fair value gap through the wick of FOMC, okay, which looks like a breaker on the lower time frames. So if we analyze this range, so if we start from the range in premium, at the highs we have relative equal highs. there was a new day opening gap here, sorry, a new week opening gap actually, that ended up holding price. So these are quadrants that we can put up. If we were to look at price at 75%, you can see that there's the highs from 2 weeks ago, which are relative equal highs. These highs form from here a bearish breaker, right? The market had open, trades lower, trades higher, and then fails. Okay, so we have here a breaker, bearish breaker block, which actually ended up creating here the high of week from 2 weeks ago. If we're to look at what's located at 50% of the range, we have quite a lot of PD rays. We still have here this wick, right? This is the same wick that I keep talking about on the daily. The market on Friday had failed to close above it, right? So this is kind of is likely telling me that even though I am bullish, I should probably anticipate for price to first return into discount if it's going to trade higher, right? If that's the scenario that's happening. If not, can keep trading lower from these levels. Now, right, we have here the previous daily high that forms at 50% of the 3-week look back. You got this wick. Personally, I'll be inclined to use here the previous weekly high, okay, which was here the formation of an order block. Price has proved that it's been sensitive to these levels. There's a large rejection block, again the previous daily high that forms at these levels, so I do think that this is a relevant level. If we're to look at price in discount, you can see here a large fair value gap cutting through the FOMC rejection block. This should definitely be the PD of interest in my opinion. And if we're to look at the lows, we have that same discount rate that we have on the daily being the new day opening gap. Okay, so personally, this is how I'm going to be approaching the week, right? In terms of 4-hour PD rays, I am very interested in seeing how price would trade inside of this inefficiency if it were to get down here and around the range of the order block and the rejection block. Overall bias, I am bias bullish personally, but the closure here of Friday was a bit weak, right? And was many SMTs left behind, right? We had divergence at the weekly high. We had a divergence, an internal divergence on Friday, where the PM session on the S&P 500 makes a new high, while Nasdaq fails to do so. Nasdaq also having much more bearish closure than ES. So very interested to see if price can retrace on this fair value gap or this order block. Okay, if in my opinion, if price is able to create here a bullish breaker, right, and failing to respect here this rejection block, then I do believe that the drawn liquidity should be the highs from 2 weeks ago, right, trading back inside the range here of the bearish breaker. Now, in between here, the rejection block and a potential premium drawn liquidity, the rejection block, the order block here, levels located at 50% of the range. Look, if my drawn liquidity will be 75%, I need to see the market inverse PD ray have 50%. Okay, so I need to see the market break the rejection block and turn this order block into a breaker. All right, and right above these levels here, if you remember this 4-hour inefficiency, this had been a premium premium array that we were looking as drawn liquidity, right, for say for this run higher, or even for a potential run higher early on in the week. The market has still left this inefficiency unfilled, so if the market can break above this bearish order block and the wick, I suspect that is going to want to use this fair value gap here to reaccumulate orders. Okay, it's going to trade into it, reject, reaccumulate around this range, and then continue trading higher. Okay, so I'm personally looking for something like this. Ideally, this would be my ideal weekly profile formation. If this can form, then again, I want to see how price trades either at 50% or at 25%, and all depending at the daily profile that it starts creating around 50% or 25%, that should give me the bias intraday and should give me also the drawn liquidity for the weekly profile. If we're to look at price here on a 3-day look back perspective, we can analyze first the phase of price delivery. We saw on FOMC day the market creating a bearish seek and destroy, right? So consolidation to expansion. On Thursday, the market creates here a classic buy. Right, so we have consolidation, expansion, expansion. And this was followed by the previous daily range being a New York reversal profile. But not really delivering as an expansion, right? This is pretty choppy price action. Overall, you can see the market closing right back to the open of the day. But nonetheless, not bullish price action, right? So again, we have consolidation to expansion to probably here what is looking to be retracement or could end up turning reversal, right? Because we nonetheless have an expansion in here, right? The New York reversal profile is an expansion profile nonetheless, right? There will be that one main expansion phase that forms inside of the New York session. So it's going to be very interesting to track this price action around these levels. We can analyze the quadrants. If we're to look at the low, we have again that same level, the previous weekly low, right? We have the new day opening gap from Thursday. At the highs, you can see that we have a large rejection block. This should be a pretty important PDA in my opinion. At 25% of the range, you can find here another large rejection block, which was the previous daily low. And then if we were to look at 50%, you can see 50% down to discount. You can see that we have many fair value gaps, right? One after the other. But what you also have from 75% up to 50% is this right here. You have a series of up close candle, right, that trade above the range high, leads to a new range low, and this was eventually displaced through, right? So this is currently here a bullish breaker block, right, accompanied obviously with a large bullish order block, and through them you have the range here of fair value gaps, right? Maybe it's not so clear here on the 1 hour, right? Should I use this fair value gap? Primarily, I do believe that this is the fair value gap that price should respect if it's going to be open, low, high, close. But you know, it could always be that it comes in trades below this one, right, or this one, creates an OTE retracement and then trades higher, or you know, distributes into these levels, reaccumulates, and then will trade lower. So personally, I would use the same discounted level that we're able to identify on the 3-week look back, which would be the range here of this 4-hour fair value gap. Okay, so at the highs, large rejection block, 25% large rejection block, 50% to 75% large inefficiency, cuts through large order block, cuts through large bullish breaker block. And if price were to get lower, drawn liquidity, price were to trade lower from these levels, right, instead of using this range as a phase of reaccumulation to trades higher, use it as a phase of distribution, okay, before reaccumulating and redistributing lower, then the drawn liquidity should be previous weekly low. Okay, so quick recap here inside of the range. Daily chart. We obviously we're going to be trading inside of a new month. We started by doing an analysis, okay, of the phase of price delivery here inside of this range. We saw that price came from classic buy, swing to Z, classic sell. Okay, so expansion, consolidation, expansion. So price have now has now retraced inside, you know, around 50% here of the 3-month look back. sorry, not the 3 month look back, but overall the yearly profile. So there definitely is an argument that from these levels the market can trade higher, right? This paired with the fact that the quarterly open still has no delivery above it, uh, definitely high probability to anticipate, in my opinion, that August can form as an open low high close. But I would need to first see a trade lower inside the discounted arrays that we identified on lower time frames. And then from this level, if it's able to create, say, a classic buy week or a New York or a Wednesday reversal week, right, and closes the week bullish, right, in bullish order flow, then in my opinion, that could already be enough to create the low of August, okay, and for price to trade higher from these levels. But if the market is unable to hold here the discounted PD raise inside of the range here, right? So the lower uh, the lower half here of the range, right, of the previous monthly range, then in that case we can anticipate a drawn liquidity which would be in discount, would likely be towards the range for the week of 26,800 down to 26,250. Okay, so the discount arrays that we identified at these levels, very, very important. In terms of premium array, right, if the market can, I said you can already start anticipating that the drawn liquidity, right, will be this for the month, right, but from a weekly perspective can be, say, these highs right here, okay, so trading back inside the the premium order block that we analyzed this to be at 75% of the previous monthly range. Okay, if the market can close above 50% here, 50% here, right, this would be an early sign that the drawn liquidity would be, say, the range around 29,400 up to 29,800. Okay, on the 3 week look back 4 hour chart, we analyzed also the phase of price delivery. We saw that price came from a a Wednesday reversal, right, to a Tuesday high of week. So we have here expansion, retracement, expansion. Monday retraces, expands again. Eventually Tuesday consolidates. Wednesday delivers as a bearish seeking to short, right? So consolidation to expansion. And Thursday opens, delivers as a classic buy. Right, and eventually Friday creates a tight range, right? Although we saw that the daily profile was a New York reversal profile. The market nonetheless comes from classic buy here. Okay, so since it comes from classic buy and overall a reversal here, right, not only from the perspective, right, of individual daily profile, but also from a weekly profile, right? Here the weekly profile being Thursday reversal. Again, it's going to be super, super important for me to see how price trades in discount and how price will trade at 50% here of the 3 week look back. If price is creating open, high, low, close profiles into the fair value gap, then I do believe that the drawn liquidity should be lower, right? And in that case, we identified here first to be the previous weekly low, and past that, the discount weekly inefficiency. Vice versa, if the market were to create open, low, high closes, right, into this PD ray, then I do believe that the drawn liquidity for the week should be here for price to trade back inside of a premium order block, right? More or less this aligns here with the range of the premium order block that we identified on the daily chart, or we said that range, say, from uh, 29,400 up to 29,700. Oh, you got about the same levels here, 29,300 up to 29,800. Okay, so very, very, very important to see PDR at 25%, PDR at 50%. Based on, again, based on how price reacts at one or the other, should give you the bias, should give you a clue of how the order flow is looking, and should give you a clue as to where the drawn liquidity is. On a 3-day look back chart, we analyzed the phase of price delivery. We saw that price came from a bearish seek and destroy to a classic buy to a New York reversal profile. So because of the New York reversal profile, again, I am anticipating for price to likely first trade lower. Obviously, there could be, the gap up, the gap lower. That's out of my control so far. But based on the price action that I have available currently going inside of the week, again, I'm interested in seeing how discount will be traded, and I'm interested in seeing how premium will be traded. These levels here align with the 4-hour chart that we just analyzed. This level here might not be relevant for the daily profile, right? It's probably not the level that will create the low, okay, or the high of week. The low or the high of day. Obviously, it is possible, but this level is probably more useful from an intraday perspective, okay, analyzing session or 4-hour profiles. Okay, say, I don't know, the market doing something like this, right? This can be a trading opportunity, or the market trades lower, eventually reclaims these levels. There's going to be trading opportunities in here also. But overall, in terms of an open low high close or open high low close daily profile, I am anticipating for one or the other to be created here in discount, right? So discount inefficiency or premium rejection block. And again, now if price were to trade past the rejection block, in that case, we need to refer to the 3-day look back, to the 3-week look back for premium drawn liquidity, right, which we analyzed for it to be 29,400 and up. But again, the right between 28.7 and 29,300 here, there's a gap in between these levels, right? So we also have a gap here at these levels, but we analyze this on the 1-hour chart, right? The rejection block here, right, this level covers the gap on the lower time frame. But from a higher time frame perspective, we have nothing here at this range. So if the market will be super aggressive and start trading higher from the open, closing above 50% of the PD at 50% of the 3-week look back, and were to find here a rejection, okay, or maybe consolidation phase around this fair value gap, my anticipation would be that the market will use this fair value gap to reaccumulate orders inside of the range before distributing higher. We can maybe pair some standard deviations with this. Or if we take the low from the previous weekly low up to the FOMC highs, I can see that 2 to 2.5 here would align with here with our low-hanging fruit for the monthly profile. Maybe for the weekly profile also could be, if this is going to be an open low high close profile. We would want to see the market trade back to the quarterly open, trade back above the 3-week look back. So far, the market has traded to negative 0.5, right, and has found here high resistance, right, is creating, or at least likely creating, right, a phase of reaccumulation. Obviously, these standard deviations could be wrong, right, if the market will open, displace this range, and continue trading lower. In that case, I would want to remove here these PD rays. 1 to 1.5, right, so a potential area where price could reaccumulate. You can see that this range starts from the 4-hour fair value gap. So again, price could trade into here, reaccumulate in the range to keep trading higher. Overall, this range also leads to another low-hanging fruit drawn liquidity, okay, for the weekly profile being the 2-week look back high. Right, and eventually negative. The terminus here of this potential market maker buy model would lead us back to all-time highs, around the range of 32,000 or so. Obviously, if the market were to trade lower here, right, then you need to identify a discount drawn liquidity that's past the 3-week look back. You would refer here to the monthly inefficiency located inside of the 3-quarter look back. From a lower time frame perspective here, there's probably a standard deviation to be put up from the New York reversal, right? As this is an intermediate term high that formed on Friday. And as you can see here, the standard deviations from the New York reversal, 2 to 2.5, happens to align with 50% of the 4-hour discount in efficiency. Like I see so far, the market has shared to 1 to 1.5, has reaccumulated in the range, and has closed bearish. Now again, obviously, it can be that price gaps up here and continues rallying, right? And this would invalidate these standard deviations. But if the market were to continue trading lower, very, 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 very important once it starts trading at the discount PD rate to see, right, to track the 4-hour profile, the session profiles, because there can likely be from these levels a smart money reversal, okay, to trade higher. Or if the market distributes inside of this level, then there can be what would likely be here, in my opinion, the second stage, right, of this market maker sell model, right, and that can provide here an area for reaccumulation to trade towards a discount drawn liquidity, which in my opinion would be at this point the previous weekly low, right? That would be a low hanging fruit drawn liquidity for the daily profile. Right, I think that covers it for today. I don't think I'm missing anything. All right, looks pretty good. We talked about standard deviations. We covered daily. We covered the 3-week, 3-day. We analyzed potential areas where price could end up forming the low of day, the high of day, and drawn liquidity past these levels, right? All right. So good luck and good trading.